Ladies and gentlemen, good day and welcome to the Compuage Infocom Limited Q1 FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Atul Mehta, Chairman and Managing Director, Compuage Infocom Limited, for his opening remarks. Thank you, and over to you, sir.
Good morning, ladies and gentlemen. Thank you for joining us on Compuage Infocom Limited's Q1 FY22 earnings conference call. I hope you and everyone around you is safe and in good health. Along with me today, we also have SGA, our investor relations advisors. We have uploaded our press release and results presentation on the stock exchanges, and I hope everybody had a chance to go through the same. Let me first start with business highlights. After witnessing strong business recovery towards the end of last financial year, Q1 FY22 was a challenging quarter for the business as the business operations were once again impacted on account of lockdown restrictions due to the second wave of COVID-19. Governments this time around understandably handled it more cautiously and extended lockdown restrictions until the new cases dropped down to a very low level to prevent the spreading of the virus, which had an impact on the business. Although the business recovery was slowed down temporarily, however, our efforts towards new business development has led us to sign 3 new brand partnerships, one of being just signed just 2 days ago. These include distribution agreement with Alcatel-Lucent Enterprise to help them build partners on voice, data and cloud solutions for India and SAARC market. Another with Smart Card Marketing Systems, which provides cloud services, and the most recent one being with Compuage Infocom to provide enterprise resource planning solutions by expanding the portfolio and to drive growth for channel partners. We are focusing more on higher profitable brands and segments to realign our capital to utilize it in the most efficient way to ensure better capital allocation, and all these new brand partnerships are moved towards that direction. These partnerships will enable us to scale up our business in a more profitable business segments, leading to better return on our capital, and at the same time provide better reach to these brands in terms of customers, especially in the Tier 2 and Tier 3 cities. Let me now give you an overview of our consolidated Q1 FY22 results. Total income for Q1 FY22 stood at 664 crores as compared to 561 crores in Q1 FY21. Gross profit for Q1 FY22 stood at 31.1 crores as compared to rupees 29.3 crores in Q1 FY21. EBITDA for Q1 FY22 stood at rupees 17.4 crores as compared to rupees 13.4 crores in Q1 FY21. EBITDA margins for Q1 FY22 stood at 2.6% as compared to 2.4% in Q1 FY21. PAT for Q1 FY22 stood at 1 crore as compared to rupees 0.2 crores in Q1 FY21. We believe IT products in the long term is going to witness strong and sustainable demand from corporates, employees working from home, students learning from home, and lastly for personal entertainment and use. All these factors collectively will lead to sustainable demand generation across the segments such as laptops, network devices, cyber security software, smartphones and personal devices in the long run, expanding the overall market size. Before concluding the speech, I would like to say that going ahead, we will continue to focus on adding new brand partnerships, increase penetration into markets by tapping untapped geographies and partners, and enhance our value addition to provide value to all our stakeholders. With this, I now open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ayush Oberoi from Victor Delta Securities. Please go ahead. Mr. Ayush Oberoi, you may go ahead with the question.
Hello? Hello, am I audible?
Yes, sir, we can hear you. Please go ahead.
Yeah. So my first question is that can you give some insights on new brand partnership you have signed and the business opportunities from these new partnerships?
Sure. So we've signed 3 brands. One is Alcatel-Lucent, which is in voice data and cloud solutions. They are primarily focused on the large projects and enterprises. They've been doing exceedingly well in all the metro projects that are being implemented in the country. Our goal is to help them expand and move into the enterprise segment, the large and mid-market and the small enterprise segment. And that is where we plan to focus all our energies. In terms of revenue, it is a little too early to talk about it because any new relationship typically takes us about 1 to 2 quarters to settle down, understand, get partners aligned, and get the business going. But that is one. Second is Smart Card Marketing Systems is a product aligned with our strategy of offering cloud solutions to the market. And third one is EPPS is on the ERP solution that we offer to the customers. Now, all these 3 brands are aimed at enhancing the bottom line of the company because all these 3 brands will offer higher than our normal margins that we are currently operating at. It is difficult to predict the revenue at this point of time. I think we'll be in a better position to share that with you once we settle down in about 2 quarters' time.
Got it, sir. The other one is that I wanted to know what is the company's debt as on June 21 and what is the cost of debt?
So the company's debt is more or less similar to what we had in March. I don't think there's been too much of change in the debt situation, which is at about 500 crores. And in terms of cost of debt would be in the region of about 11%.
Okay. And what was the revenue contribution from each business segment and what would be the margins in each business in each segment?
So I can share with you the revenue breakup. We've broken up our businesses into 4 verticals. IT consumer and IT enterprise, cloud, and services, which are primarily hardware services that we are into. The approximately breakup for consumer would be 46%, enterprise is about 43.5%, cloud is at about 10%, and services is at about 0.5%, which is more bottom line oriented revenue. Margins is something it's difficult to share because the margins would within each vertical also the range changes. So that is something which we find it difficult to share at this juncture.
Okay, so that was helpful. And the last part, our peers in the industries has been doing well. So what are the challenges our company is facing?
So I think in this industry, one is size matters, which is what I think we are working towards. Second is also it's a question of product mix. Now, as you can see, we are already operating. If I were to combine enterprise and cloud, which is all aimed at enterprise, which is at about 53% of our revenue. Our focus on the laptop and smartphone space is less, primarily because we want to use our existing resources more towards profitable businesses. And therefore, I think that is the only restricting factor. And we don't want to change our stance. We want to focus on growing businesses which are going to contribute towards higher bottom line. So that is a strategy that we are working towards and will continue working on the same path.
Okay, sir. Thank you. That was very helpful, and that's it all from my side.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Ridhim Shah from NM Securities. Please go ahead.
Hello. Good morning, sir. Sir,
Morning.
my first question is, are you thinking of creating some kind of marketplace model for the company?
So our entire business is going to be B2B. We're not going to be catering to end customers as such, because we don't want to compete with our own set of customers, the resellers who fulfill the needs of end customers, be it individual customers, be it SOHO, be it SMB, be it enterprise, government, institutions, whatever. Having said that, we are in the process of creating a marketplace model for cloud offerings, but that will be available only to resellers. It will not be available to end customers.
Okay. My second question is, are you in talks with more new brands for partnership?
Yes, that is an ongoing process. As I mentioned in my speech, we are working towards adding brands and penetrating newer and newer geographies and partners. And that is an ongoing process which will continue.
So, sir, do you have any long-term target of revenue and margin in mind?
So we are not getting into projections, especially during these times when things are a little dynamic. So we are refraining ourselves from making projections. But yes, growth is paramount, and we will be back on growth beginning this year, and moving forward, that will be the mantra that we'll be working with.
So, thank you. That's just information.
Thank you. Participants who wish to ask questions, please press star and 1. The next question is from the line of Pradeep Shah from PS Securities.
Hello. Am I audible?
Yes.
Thank you for giving me an opportunity. I have a couple of questions. What is the current working capital cycle? Has it improved over last period, last year, or how is the trend?
So we were in the process of improving as we ended Q4, but in Q1 it has deteriorated, primarily because of the lockdown situation. And the working cycle, when we ended March 21, that is receivables plus inventory less payables, was at 62 days. It has deteriorated to about 85 days. Having said that, we don't see any challenges on that front. It was only because of the prevailing lockdown that affected this cycle.
And what would be your target in terms of you would like to go back to around 60 days in this year?
Yes, our goal is to hit 60 days by September, barring any unforeseen circumstances.
Major portion is on inventory days, or how?
No, it's a balanced thing. Both have gone up. Our receivables has gone up to 75 days. Inventory has gone up to about 45 days.
Okay. But your
model has remained intact because we ensure that we honor all our commitments, and therefore payables, there's no deviation.
But are you facing any challenges with respect to receivables, any provisions or something like that you have to keep?
We're not facing any challenges except delays. But we do not provide for the simple reason that we have a fallback mechanism on insurance. Our entire sales is covered under credit insurance. So in the event of any doubtful debt, we can always claim it we can file a claim with the insurance.
Historically also you have not seen any disturbance or something like that?
No, it's quite well managed, I would say, and it's definitely not a point of concern.
Okay. Any plan to do equity fundraise in next 1 or 2 years?
Yes, we've not decided the quantum and the timeline, but that is definitely something that we would like to look at over the next. The time frame is not decided, but yes, that is something that we will explore.
And what would be your current debt to equity? Or do you plan to reduce the debt going ahead, or how the structure would look like?
So reducing will be difficult as we grow. The only plan is to ensure that we have a right mix between debt and equity so that we manage the right ratios as we move along.
Major portion of your debt would be long term or short term?
Major is short term because
Working capital.
Everything is working capital. That's where we need all our funds.
Okay. Thank you. That's it from my end. Thank you so much.
Thank you. The next question is from the line of Nimish Sheth from GT Advisory. Please go ahead.
Good morning, sir. Hello.
Morning.
Hi, how are you? All good?
All good. I hope all
Congratulations, at least in a tough quarter, numbers are decent, I think, given that we had lockdown and we had a lockdown across states and cities and things like that. I have a broad question. When you hear the results and the post-results concalls of most of the IT services companies, they have I wouldn't say messed up, but they are a little behind the curve on capacity, in building up capacity. So if you see the hirings that they've done for the quarter, they're substantially, or maybe in one quarter they've hired as much as they did all of the previous fiscal, which is not really a comparison. But the pointer is that they're starting to build up capacity, and like in the old days, when the bench would be at 75% and not 90 as it is now, they're just going to have a lot of people sitting idle so that when they because the demand side is very strong. My question to you is the following. Are you seeing a lot of traction or orders from enterprises for, say, laptops and servers or whatever, and software, whatever stuff that you supply? Is it in line with what the IT services are telling us? That's the only question. Thanks.
First thing, yes, considering the lockdown, I think we are quite satisfied with a lot of concerns, but I think we ended the quarter in a reasonably good shape compared to Q1 of FY21. And I think there were a lot of learnings which helped us in this current period, because in our case, except for the cloud and software business, warehouses working is very important. And with 70-80% of the country being under lockdown, warehouses being shut, freight movement being restricted, it was quite a challenge. But hopefully we could make up for some lost ground in June after the reopening. Now, coming to the second, or the more specific in terms of the demand gen, the laptop demand continues to be good, primarily for various reasons. One of the reasons, of course, you mentioned about all these software services company going in for a recruitment binge, and the first thing that they require is a laptop. The back-end infrastructure is already in place to support those people. We've not seen a very, very strong demand of the enterprise products as in terms of execution, but we are seeing inquiries coming up now, and that will result in better offtake as we progress in the quarter. So all our plans are, while short term is very important, what we are looking at is a 3 to 5 year horizon where we see a fantastic opportunity as we move along, because the demand of overall IT products, be it hardware, be it software, be it cloud, be it services, is definitely gonna, now that people have realized that people cannot survive without it, and want to be prepared and better equipped. So we will see a strong demand in the next few years.
Okay, noted. Great. Thank you so much and all the best. Thank you.
Thank you, Nimish bhai.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. The next question is from the line of Isha Savla from Arya Securities. Please go ahead.
Thank you for the opportunity, sir. So I have 2 questions. As service is a high margin business, what plans do you have to scale up this segment?
So let me give a brief update what we do in services, and then I'll come to the specific questions. What we do is, the way we sign up for distribution relationships, as a distributor, we are not required to provide any services. Once we sell the product, it is our job is done. Then, it is the service arm of the brands that take over. When we saw an opportunity, so we are signing up with these brands. We have a separate vertical within Compuage, which provides services. So we are signing up a separate service agreement with these brands, and we've already got 6, 7, 8 brands signed up, and the major ones being ASUS, HP, Vertiv Emerson, Xerox, and a few others, and there is one more brand getting signed up in the next few days. So what we do is, when let's say I or you as a customer have a problem within the warranty period with our product, be it a printer or a laptop, whatever we have signed up for, we call the toll-free number, and the toll-free number directs it to Compuage, and Compuage goes and fixes the product and gets compensated by the brand. We provide these services by and large only in the warranty period, not post-warranty, because spares availability management for hundreds of products is a big challenge in itself. Now, in terms of, we see a huge potential. We already have spread ourselves from a few locations. We have our service centers, 69 service centers across India, more than a few hundred engineers operating. And the plans are, like our distribution business, to add more brands and open more service centers so that we can provide more services and gain revenue. So the focus is on definitely increasing this part of business as well. However, there is a gestation period from the time we sign a brand till it becomes standalone profitable, because there is a curve in terms of training and development and getting settled and moving on, which is about 2 to 3 quarters. Last year we signed up with HP, and it has gone through all these turmoil of on-off kind of situation, because going and servicing during the pandemic has been a big challenge. But we are focused and will grow this business quite a bit. We will become one of the leading service providers in the country.
Okay, so thank you. That was helpful. And so I have one more question. That what kind of revenue mix among business segments we are targeting in the long term?
That's a little difficult to answer. What I can say is our focus is more towards profitable businesses, which currently we see it where there is more value addition, and that comes from enterprise and cloud offerings. But that doesn't mean we are going to ignore the consumer business. We are in talks with more brands, and in the event the margins that we are looking at is met, we will continue to grow as well. So if you ask me for the current financial year, the mix is going to be almost similar. We will be able to make a more predictable estimate once we end the year so that we will have clarity on margins and thereby the product mix that we will be targeting.
Okay, sir. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. Well, as there are no further questions, I'd like to hand the conference back to Mr. Atul Mehta for closing comments.
Thank you everyone for joining the call. I hope I've been able to answer most of your queries. In case of any queries that may not have been answered or that you may come up with, you may contact SGA, Investor Relations Partners. Thank you so much.
Thank you very much. On behalf of Compuage Infocom Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.